What's up, everybody? Welcome. A lot of people over here. Let's go. So what's up? Welcome everybody. If y'all join, it's gonna be quite a bit of people in here. Just because I am part of I don't know how many servers. Hopefully everybody's having a green day today. Yeah, what's up, Mike? Can you guys please mute your mics too upon joining? Unless you guys are gonna talk, then unmute them. But otherwise, just keep it on mute, please, or you will get kicked. What is this? So today we're just gonna talk about some volume profiles in the market. I got a lot of questions the past couple of days, and got a couple of DMs asking me about how important is volume. And we're just going to talk about volume. And if you guys have any questions in between, you guys want me to look at a chart, maybe ask me anything that has to do with trading, anything in general, whatever it is. I don't care if it's personal. Freaking ask me a question. Now is the time to literally put yourselves in that place where you can ask whatever the heck you want. Just don't ask me what I'm wearing. Don't make it awkward. You guys good? Y'all having a green day? Is everybody here green? Man, I just sent out this link to so many servers. What's up? Can you guys mute your mics too if you guys aren't going to talk, please? Cool. Giving it a few minutes. You know, there's still a lot of people joining. Remember, I sent this link out to at least 6 different servers. So there's going to be quite a bit of people in here. Well, I mean, unless people are working, then there won't be that many. But either way, it's still going to be a nice group here. What's up, everybody? If you guys have questions, please feel free to ask right now. The floor is open up before I get going. I'm just giving everybody some time to join. Everybody's normally people work around this time. I always forget, but I'm always free anyway around the morning time. So for me, it's not a big deal. Novi Mots, can you mute your mic, please? I don't know if I killed your name or anything. Or Antonio, can you mute your mic, please? How many contracts did you have on Starbucks? 8 total, and I have 1 left right now. It was a good position. I got in yesterday. It was a $1,200 position, almost $1,300. Did you get in Starbucks? I hope you did. You were busy at the time? The entry was all day today. So I don't know what busy you were. Were you busy yesterday or were you talking about today? Because the entry was yesterday and today. Want me to show you? You guys want to break down Starbucks? So I'm just curious to see like where you were busy, because getting into this position with some time, the entry was here, okay? This was your entry, and this was your entry. Oh, why? So if you were busy in between these times, then I don't know what to tell you. But this whole area is literally a buy. I don't know. I mean, unless you were sleeping from yesterday midday all the way to today market open, and I can see that. But either way, it was still a good position here for Starbucks all day. Yo, BK, can you mute your mic, bro, please? Thank you. 3 of Italian. That's insane. Yeah, so for Starbucks, I want to show you how important this is, right? So look at this nice downtrend, okay? This nice downtrend while the market is getting, smacked around. Starbucks has been on a consistent downtrend. So any range that's been built here, any trend, any pattern, it's all been downwards. The rejection has been aggressive for Starbucks. So yeah, so for anything that has to do with Starbucks right now at this moment, everything in general is still bearish. So if you guys don't know, if you guys have seen my charts and my setups, I don't post anything that's at an all-time high, or I don't post something that's ran the previous day and tell you to buy at the top, right? I always provide a good level when it comes to risk to reward, right? Your risk should be minimal versus your reward should be, a lot higher. When you get these type of positions, you can enter it safely, right? So Hawaiian guy or Hawaiian girl, whoever you are, sorry. The position for Starbucks here was the entry at any point, right? At any point, I say that because now you can enter a good position with some time on your contract. My rule of thumb is always to grab as close as in the money or at the money or whatever you want to call it. The close contract to the level that it's currently at is the best way that I can put it for you guys, with some time on your contracts, because now you can go to sleep, you can go out, enjoy about your day, you can go to work and not worry so much because of the data. The data is going to kill you if you grab a closer expiration. The longer expiration you grab, the better it is. And yes, you're putting a lot more money. The reward percentage-wise, it's not going to be that great and not that high versus the ones that are closer. But either way, you're building a consistent, profitable trade and execution with a consistent return on a day-to-day basis, right? I will look at this. So the reason I grabbed this one was the 29th. I grabbed the 80 call position on this, right? So I grabbed the 29th. I grabbed about 8 contracts down here yesterday because of the 78.72, right? So the 78.72 never cracked below. And price action, what it is something that's happened in the past, will most likely happen in the future. The way that those things are established are the way that you can identify with the market sentiment and with the pattern that's formed, or if it doesn't even have any pattern, you still got to be able to identify those levels and follow along. The biggest thing here with Starbucks is that in the past, from this huge downtrend, right, this is how you got to look at it, right? So from 127.89, we dropped all the way down to 104, and then we bounced back all the way to this level. So from this point exactly, from this 117, we went down to 78.72, okay? That's the way you got to look at it, because this is the current trend. So from that point in the past, right, from 78.72, we ran all the way to that 90. Now that we're at this point again, we came down, created a base down here, and we did not sell off with selling pressure. That was the difference. The difference here was that there was no crazy volume. Okay, so this is the point where I'm going to get to the volume part. At this point, some of you guys think that volume is a great thing to look at, or is very, very important. Yes, it's important in some cases, but in some cases, it's okay to start building and to start trusting the trend even on low volume. Okay, the risk to reward, the setup, the entry type of position, the type of ticker that it is, the type of value that it's at, all of it entails all together tied in. Okay, so when this thing had sold off, there's a lot of volume that came in at these levels. Okay, so I want to point out, now I'm not using no specific volume indicator here. This is just a TOS, whatever came on TOS, the stock thing. I put it in the background, so I don't come on here and look at like, oh, there's 5 million not normal, and 10 million the next day. I don't look at that garbage. For me, it doesn't make any sense to look at that, because if there's going to be a green candle, that means that there's people buying. If there's a red candle, that means that there's people selling. I don't care the amount. The amount is not of a big importance to me. The big importance to me is the type of pattern, the type of setup, the type of entry that it's going to take, and the risk to reward that makes sense, right? So anything that's happened in the past will most likely happen in the future, right? So it goes back to, again, to saying, look at this, 1, 2, 3, 4 days. Okay, so these past 4 days right here was filled with some crazy volume here, and then crazy volume here. Okay, so none of this really matters to me, right? Because look at this crazy volume here, and then compare it to these 2 days here. Okay, this is how you can identify where some of those breakouts are going to be, where volume really matters and where it really doesn't. Okay, because some of the moves already happened, and once those moves happen already, that's when retail tries to come in and buy the top. You don't want to buy tops, okay? You never want to buy tops. You want to get the best risk to reward. If you guys have jobs, if you guys want to go to sleep because you're in Hawaii and you want to take a position to be able to sleep at night, right? Because you don't want to stress, and you want to grab something that's going to make sense. So like I said, Starbucks was an entry yesterday and today, giving you a good position to enter a long without having to worry so much, because the market right now, sentiment is turning bullish on the day, right? Nobody could have predicted that it went bullish. Nobody could have predicted that it's still freaking green, right? The past few weeks, the market's been very, very bearish. But again, Starbucks has been bearish for a very, very long time. And then finally, we may have a potential of creating a double bottom in a bearish market, okay? That's the type of setup that I posted on Starbucks specifically. So the volume here to me doesn't really matter. Okay, what matters is the fact that number one, we have a good sentiment. Number two, the risk to reward makes sense. So buying time on your contract, it's not going to put you, negative red 80% if you're taking this trade. So I was red yesterday when I entered. I entered around like 79.60 and then added some more. So as it went up, I scaled out. So I scaled out of my full position, making this position very, very green. Most of you guys would say that the volume profile is very, very low today, right? And those are the kind of questions that I'm getting. But this volume has been coming down the past couple of days. But even with low volume today, it created a nice repeated pattern from the past. So meaning that at 78.70, buyers still showed up yesterday and today, meaning that the sentiment and the price action for this is going to be bullish. So giving you a predictable future, it's going to be bullish. So therefore, you're making a wise judgment based on what's happened in the past, not based on the volume, that this is going to push up. So that's the risk that I took today. Yes, thank you, Riva. So low volume creates a base, giving you a type 2 entry opportunity. So giving you the opportunity to buy at the bottom is basically what I'm saying, okay? So while everybody's over here worried that we need volume, that the volume is low, that there's no buying pressure, all that stuff is really, really good. It's good because at tomorrow, I kid you not, somebody somewhere is going to say break above the high and it's going to continue up. That's when the volume will increase a little more, okay? So the volume will increase intraday, and there's going to be a little more buying pressure because now everybody who missed this bottom and who missed the opportunity to actually get into something that has value and great reward missed out, and now is entering the next day because they're the ones that are looking to buy the top when I'm over here looking to scale out of my position, okay? So with low or high volume today, it didn't matter because there is still more buyers today than there is sellers, creating a nice swing play position, creating a stress-free trade. You guys can go to sleep. You guys can go shopping. You can do whatever you want, go to work, not worry so much because it's trending on some low volume. That low volume is still buying. Once people starts coming in tomorrow, then you may see a little aggressive volume, but only if the market is bullish, only if Starbucks gets a little more momentum, then it'll create a little more volume, thus creating more of a day trade style versus the swing trade, because now the swing trade was entered on low volume, right at the bottom of the base with the pattern, creating a nice demand and giving that opportunity to actually swing this, and then the IV increase with volume tomorrow. So if volume comes in tomorrow right here at this particular area, then the IV from your swing, from yesterday's swing, will increase, giving you more premium on your contract, and therefore pushing this stock all the way to this 83.60 to the high of 84 in the next couple of days. As crazy as that sound, guys, it's very important to understand where you're buying, what you're buying, the value of the company, and the way that the market sentiment is. Okay, it's not always about volume. Okay, now let's go look. Did you guys understand that on Starbucks before I move on? I was waiting to see if anybody has questions on Starbucks, because that was the proper breakdown on Starbucks for you guys. Let me know. You guys can type in the chat. Yo, can you mute your mic, bro? I just heard you burp. Novi mode, wherever you are. Cool. Well, nobody else is replying, so I'm just gonna keep on going. All right, so the thing about volume here too. All right, we're gonna talk about /ES and the importance of year two. Everybody's saying that it's moving up with low volume. Let's go look at these previous volume profiles, right? When something, again, like I said, when it's downtrending, okay, the difference here with the market is that you're looking at a bigger basket of stocks. Okay, the futures hold ETFs and stocks under the ETFs. So if there are tickers that are strong in that ETF that actually hold weight in that ETF, it can move potentially the full market in general, meaning that it's going to give a lot more sentiment to the market. So when you look at /ES, some of you guys looking at SPY or QQQ or IWM, you're not only looking at one ticker. So remember that. You're looking at a huge basket of tickers in general in the markets. Okay, so the one thing about the market lately is volatility. Volatility is an increase of fear. Okay, volatility is based on market catalyst. The market catalyst that's going to bring up this red candle to go green like this. Okay, no matter where it's at. So number one, you can't chart VIX. Okay, fear cannot be charted. All right, make that number one. So since today there is no major catalyst in the market, there is going to be low volume. Okay, meaning that there's not going to be crazy volatility where something is just moving aggressively. Today there was nice movement based on the bottom of the base. So kind of like the same thing as Starbucks, right? What we talked about Starbucks was that we were on a nice downtrend. So from this downtrend, we actually came down to this 43.50 and retested this specific zone, right? So the previous area where we once bounced from right here, and then this staircase pattern, basically 50% of this bad boy, okay? So from this point here down to this point is about 50% retracement in general. So if you guys don't know, 50% retracement of a previous trend, usually that's your dip buy opportunity. So this is a dip buy opportunity for everybody to go long and make a new high. Okay, that's kind of what stocks do in general. You push up, you pull back 50% of that previous move, and then you run back up, breaking the previous high right here. That's how I see /ES, but I really see it at 45.50 coming by the end of the week, or even 4,500. Okay, it sounds crazy. So if you guys watched that YouTube video, the futures, you guys should know that I did say that we're going to have a green week, as crazy as that sounded. So for that reason, we're kind of down here, right? So with the volume, again, everybody's saying that it's low volume because they're so used to seeing, you know, things like this. Look at this crazy volume, okay? And then right here, it dies a little bit more. And then right here, it dies a little bit more. And all of a sudden, we're still way down here, but we're still green, okay? The difference here is that the volatility to the downside gets aggressive, and the fear is what brings in more buyers and sellers in the market. So now you have a multiple of things happening within the market in itself. All in general across the board, there's people buying and there's people selling. There's not a lot of pressure in many stocks, but there is more stocks moving at once in one particular day. On this one, everybody, you know, it was a break of trend. People were selling from the previous run up. Number two, people were coming in on some put positions. Number three, put positions were traded intraday. And it was the same thing and coming down. Look at the volume just dying. And today, all of a sudden, people are asking about volume and how important it is, okay? Again, it is important, all right? But it's not something that you should look at and consider as, oh, it's low volume, I gotta be careful. No, okay? Consider it as something good, because now that you know that that volume, that even though it's low, first of all, there's no volatility, okay? There's no fear in the markets. And that volume that you call low are all buyers. How come you're not in it? That's the question. So I move when there's buying and I move when they're selling. Whatever direction comes first, that's the one that I'm going to come on. Okay, whether it's low volume like this or high volume or aggressive volume or non-aggressive volume, it's going to be that directional play. Okay, so it's not a big issue. This is actual normal volume for the market in general. So again, there is no buying pressure. There is no selling pressure whatsoever. So everybody that showed up today, show you the 15, is all buyers. All buyers came in right at the open and the move was basically done. So what's going to happen here now, the difference here between volume, the opening and the midday. The midday, you want to try to compare it to the previous day. Okay, maybe grab like the past 2 days. Now, you can identify where the buyers are going to show up. Okay, so this Friday, the volume was not as aggressive at the open. Midday came in, it was a little bit flat. Okay, so midday, you're always going to get this low volume in general, and this is where the algos kick in the market. If they don't, it's because it's going to be range and it's going to be a little crazy, just kind of like this. So here, the volume pressure started already here. Okay, and then at closing, there was more volume. So this is how you can identify and help you the next day. So we held range, right? The volume came in when there was buying. And at close, again, the volume came in when there was buying. Not the selling. As you can see that the selling was not aggressive volume. The volume started coming in when there was buyers and then buyers towards the closing. At the open, you got the same buyers. So now you're grabbing the 2 days of volume compared to your midday, which your midday is very, very low compared to the previous 2 trading days, right? So now you're grabbing a whole market in general and just kind of understanding where the volume came from and why we're so green. We're so green, number one, because of the buyers yesterday into today, because they built a position to go long. So now everything makes sense. So even though today it may look like there's slow volume, there's still volume from the previous day who are actually in this position still. These people are the ones that, one, probably added, number two, probably sold at the top now. Okay, so what you're going to look out for now is going to be the ending volume. The ending volume that's going to decide whether or not these same buyers that were here are going to show up at the closing. Okay, that's the thing about volume that you can kind of just see intraday and kind of just identify on the previous levels. But again, on the bigger picture, we were at a level where we should have been bouncing at a level of demand is 43.80, 43.90. And we also broke above this base here. I don't know if you guys can see it, but that base here, if you want to make that base a little bit bigger, just kind of understand that. That's the piece that we're over. So definitely creating a lot more buying. Again, no crazy volume. But again, it doesn't really matter and it's not of a huge importance. Now what you want to see is you want these levels to actually hold. But in general, the market right now is still a bit bearish. the sentiment is still bearish because of inflation, because of recession, the interest rate hikes, and all this other stuff. Okay, so it's not a big issue to look at huge volume and say that it has to go green with volume. Okay, the market does not have to go green with huge volume, just like it doesn't have to go red with huge volume. There's a difference, all right? There's a time and place for those things, and to understand that, it takes a little more time and patience. But also remember that the level that we're at a demand. We don't need crazy volume. We just need people buying. We're at a supply, so we don't need crazy volume, just people selling and people taking profits. So it's a mixture and combination of both things, okay? So that's kind of like the volume thing. It's not a huge importance, guys, okay? It's important when there's a breakout, maybe a pattern breakout in the intraday, and a breakout of important levels where volume is gonna come in, right? So let's look at JPM on the 15, just to give you an idea as to why volume is a little bit important. Look at this little volume spike right here at a level where people probably took profits, okay? Nice little volume spike right here. Nice little volume spike when we broke above that resistance. Okay, what do we get? Nice little volume spike here when somebody bought the dip. So these people are probably still in that trade, and they're probably finally taking profits on JPM. So there are little areas where it matters, but again, it doesn't need a full, huge volume bar in order for you guys to say that it's only bullish because there's high volume, or it's only bearish because there's high volume, right? This market will run up, run down with or without you, and it's going to keep on going. All right. So it's not a huge importance, but some days you just got to be able to identify where the volume profile is going to make sense. Otherwise, respect the levels. All right. So let's go take a look at a couple more. Look at the volume on Disney. Okay. Let's point out how important this is. So kind of the same thing like I explained, right? You want to look at the previous day, right? This volume was aggressive intraday. Number one, because we broke a major demand. Okay, we had a nice little pattern, nice little squeeze. And look at all the retail crew that came in. But at the same time, you had more volume come in than we did the previous 2 days. So because we had the same volume, it's not always selling volume. It's a mixture of both, people buying and people selling. At the bottom, look how steady the volume stayed into the close, right? Giving you a nice break out of the pre-markets and reclaiming its demand on the bigger time frame with the increase of volume today. The increase of volume today giving you a nice play for Disney all the way back to the upside of that supply. This didn't reclaim. I even reset my alert to get a dip buy, but that never happened. So tomorrow I'm just gonna continue watching Disney, because on the bigger time frame, guys, this thing is at a great level. Like, this level is amazing for Disney. Look at the way that it's leaving this candle based off yesterday's volume and today's volume. That can potentially keep on rocking. So Disney is definitely a great ticker to watch, but I don't see value buying at the breakout of 133. I would see more value buying down at these bottom levels and waiting for that breakout. So if volume cools off tomorrow and it's low volume and it creates like a red trend down to this like 131, 130 level, I'm going to buy it again at this bottom because of this crazy volume that came in to reclaim a demand. Okay, so giving you guys different rundowns on volume profiles for different tickers. Oh, look, I just got my 133 alert, which again, it doesn't make sense for me to buy that top. But yeah, that's Disney. Drew. You guys have anything, any other questions based on volume? You guys can ask now. You can unmute your mics. Let me know. Otherwise, I'm just kind of talking in the way. You guys have any questions? Type in the chat if you guys want, right here in the Zoom chat. You guys want me to look at a ticker? Let me know. When you're alert, the top goes off, you're sitting on your hands till it retraces. Yes. Yeah, because the move already happened for Disney. So right now, I just want to be alerted. I don't want to take the trade. Yeah, when I get my alerts, I buy. Okay, but everything has to make sense, right? First of all, why are you buying and how did we get there? Okay. Did you buy at a demand? Did you buy at a supply? Did you buy in a bearish market? Did you buy in a bullish market? You know, what kind of sentiment are you buying on? So it's all a matter of what kind of alert you're getting. I get tons of alerts in the market because I do this full time. So I want to be aware of what's moving in the markets. So for example, I didn't have ARK on my watch list, but I did set some alerts and I can almost guarantee you that it's super green. Yeah. It's nice and green. So look at this. I probably got my alert right here at the 60. So the next alert right here is at 61.30. And the cool thing is that it's getting the alerts before it breaks out this base of 62. Okay. But again, I go back to saying that I want to stay alerted. I want to make sure that tomorrow I'm fully prepared to what to look for. So now when I create my watch list, all I got to remember is that all my alerts are hitting from yesterday. I got to go look at tomorrow pre-market. So for example, I'm going to go look at ARK tomorrow. I'm going to look at Disney tomorrow. I'm going to continue looking at Starbucks, of course, because I am in that swing still. I haven't sold. And I'm going to go look at the rest of FANG because FANG this week is today is super green. Things like Apple, I think it was Facebook had an amazing day. Microsoft, Google's building a nice base. Amazon went on crack today. So I'm aware of what's going on. So therefore, when I go and make my watch list, I don't have to go and search the full market. I already know that my alerts hit for specific tickers, and therefore I will add them into my watch list and continue to trade them. But this thing's already above 133, and as much as I want to get in this position, as much as I wanted to get in, Netflix has earnings. So the sentiment for the streaming services are being affected today. I can almost guarantee you that Roku is green too. Yeah, super green. So Roku, Netflix, and Disney all kind of just run in the same area. Usually when one of those is solid green, you know, they're all looking pretty great if you ask me. But again, it comes with just time. Yeah. That's quite a bit of you guys. What's up, everybody? But yeah, you guys have any questions? You guys want me to look at a ticker right now? Let me know. Maybe you guys have questions on trailing or contracts, sectors, whatever it is you guys have me right now. If not, then that's cool. You guys must be super green. Trailing? What do you want to know about trailing? Give me a ticker and I'll tell you. What are you in? You're in PayPal? All right. So first of all, when it comes to trailing, everything depends on the time frame you're on. Okay, the time frame and the position that you're in. So for me, I did enter a leap position today. Okay, I entered a 130 call for September. That's a couple months from now. So I have a total of 2 contracts, right? One contract went red on me and I let it go red on me because I didn't really care. What ended up happening is I went super green on PayPal so that leap position is actually free on my books. What I ended up doing with PayPal is I ended up grabbing a leap position here. But as I grabbed this leap position, I played it all the way to the top and all the way to the high as this here. Okay, so I played calls all the way this way. So I made more than enough money. I made more than enough money on PayPal to pay for that leap and not to worry. Even if it went red, it didn't matter because I have till September. Okay, so I'm green. The original leap position is red. Yo, HP, can you mute your mic, bro? Yo, HP, I don't know who you are. Can you mute your mic, dude? Cool. All right. So what I did is I made it worth my while, right? I made it worth my time. I made it worth everything that I potentially can. So having this position for me, I will trail all the way to the top, okay? I had the opportunity to close my position, but that was not my goal. My goal is to ride it all the way to 130, even as high as 150, 160. That's my plan with that position. Now, when you get on the smaller time frames, all right, what you want to do is on the 15. I'm always on the 15. I don't go any lower than this. I think going lower than this is just a bunch of garbage, but that's just my opinion. 15-minute will give you full candles, and it'll give you more of an understanding of a direction, a proper direction. Once you have this, what you want to do on the 15 is, number one, where are you buying at demand? If the answer is yes, then you use those pre-market levels as trail stops, okay? So let's just say you bought it at open. SQ is at 126.58 now. Let's just say you bought it here, okay? Just an example. Your first target becomes the high of the pre-market. Okay, so technically it already hit. Boom. This naturally becomes your trail stop. Once you hit that pre-market, you should be trailing stop right below, like no questions asked. You literally like 1 cent, 10 cent, 5 cents, whatever it is, literally your trail stop should be right below, okay? Once it goes above that pre-market, what you want to do is look at the previous day high. Once you look at the previous day high, then that becomes your new target, okay? So this is how you use your trailing methods now. Once you have this now, you're already in the green, you got in at open, you got in at 100 or even like 140, whatever your entry was. And then this becomes your first trail stop, okay? So now that you're in PayPal, there is no reason whatsoever for you to get out of this position. No reason whatsoever. The only reason that you're going to get out is because you chose to. All right. When you make that judgment call to say, I need to take profit, that becomes your choice. And that becomes your take profit level. And whatever happens next, who cares? Don't come in here saying you missed out or you sold too early, because that creates FOMO and that creates bad habits. So now that you have this, what you do is on the 15-minute time frame, you want to use every candle as a trail stop, okay? So once this 15-minute candle closes, you want to use that body. Boom, top of body. Next 15-minute candle closes, boom, top of candle body. Next one hits, your target hits, guess what? This here becomes your trail stop. So now from this pre-market, you just moved it up here. So you're at the first target and still no pullback. Once you know that we're up a couple 15-minute candles, guess what? This becomes your trail stop right here. And now you're in a free position, allowing it to run on a smaller time frame. And your bigger target now becomes this here. So now you're using the previous day high. So that becomes your target. So now you're technically swinging for the fences into the closing. Okay, did that make sense right there, Joe? Once this sits up here now, what's going to be your trail stop? Move that bad boy up. Boom, right here. Got alert for Facebook. Facebook's still trending. And look at this. Look at the volume. Okay, so you do this to any ticker, and I almost guarantee that you'll always be green on your trailing. When price hits a supply or demand zone repeatedly, is that level considered weak or strong in regard to that level getting broken? When price hits a supply or demand zone repeatedly, weak or strong. It doesn't matter how many times a supply or demand hits, okay? What matters is like the the sentiment that's going to create more of a pressure, right? So the bigger the base, the better it is, right? So I'm going to give you a huge example right now on a weekly time frame. You see this already? I'm sure you can already see it. I'm just going to delete everything. So the longer the base, the bigger the move will be, okay? So look at this top, okay? Look how many times this thing got freaking hit. 1, 2, 3, 4, 5, 6, 7. It broke. 8 retest failed. Okay, so it's important to understand how heavy that supplier demand is going to be. Once you can enter that position, you can always enter it at the same time. Whether it's going to be supply and always grab puts, whether it's going to be demand and you're always going to grab calls. It doesn't matter. What's going to happen is the natural price reaction will always be in that favor. Okay, until things change, you could have played how many times puts on this thing? So you could have played puts 1, 2, 3, and the 4th time you would have been wrong. So you always want to play it no matter what. Okay, and that's what gives you that that conviction that you can stop out real fast because you know your stop loss is going to be right there. Until that comes and retest, the retest buyers never came in, so it's still considered a put play. So look how far it drove it down. So your strength on the supply here was very, very strong, and it was weak on the retest. So the supply stayed supply, and it never became demand. It only broke one time for 2 weeks, and then the 3rd week, boom, dropped down, retest, failed the next one, and just kept on rallying down, right? So this is like now another example for Disney. Right, I'm going with 4 hour. The demand for Disney was very, very strong. The difference here is that it broke yesterday and it came down even further to make a new low. But this is still considered a demand now, right? So looking at the bigger picture, all this here is your true demand. This is your true demand for Disney. And so people are still buying Disney. Now, I wanted to enter today, believe me. The only thing that held me back is because of Netflix having earnings. That is the one reason I did not enter Disney, and I stuck to my rules. That is part of my personal rule that I have to follow no matter what happens. Even though I knew Disney was going to run, even though I knew that there was green candles, I did not enter because I respected my rules as a trader. Now, if you didn't have that rule, you could have definitely entered Disney at 130 reclaiming and rode it all the way back up into this supply. Because technically, Disney is at a great level. Starbucks is at a great level. These tickers, guys, have great value in general. And the demand here for Disney is amazing. So imagine always buying at a demand when it hits, you're consistently green. Now, I got stopped out on a swing that I had entered. I got screwed over on Friday. I pretty much had a bad Friday for Disney because of my broker, but that's a whole different story. But again, that would not have stopped me from trading it today. The only thing that did was because of Netflix earnings. It's stopping me from entering this specific trade again. So again, it doesn't matter how many times a zone hits. The zone will always be a zone no matter what happens. It would always stay supply. It would always stay demand. The difference is that when the retest comes, it's going to switch it to either demand or supply. One of the two is going to happen. In this case right here, it switched. It went from demand to supply and it broke down, came back in for the retest and it reclaimed it. So the retest is now giving you confirmation that the demand is still holding demand. So that zone is not changing. If this would have changed, it would have rejected today. Yeah, for sure. Hopefully that made sense. So you can still trade Disney over 133. I mean, honestly, you can enter today still, and it wouldn't make a difference as long as you buy some time. Like you can legit buy a 140. So you can go to the 29th or May 6th, right? I would prefer 29th because it's Tuesday. And you can buy like a 133 call or a 134. And then just kind of like build into that position, right? So what you would do is you would buy like one contract. Let's just say your ultimate full position is about 5 contracts to 10 contracts. I don't know what you guys go for. But let's just do an example, right? Let's just say you enter a position here and Disney drops here. You can buy one here and then buy the same contract here. At this point, what you're doing is you're basically averaging down for a reversal to do something like this. This is what you would naturally look for. Okay, I'm not saying it has to go way down here, but just in case if it does and like the market gap's down and Netflix gets crushed on earnings, it's going to drop Disney over here. But at least you're buying in a huge demand. So you're entering here, adding down here at the bottom, and then you're riding it all the way to the top. And therefore, when it starts to trend back up, you can add into your position when it breaks above here, and then start scaling out once you start hitting these tops here. Of course, with the bullish markets, guys, right now, everything is still a bit bearish, and these trends only last temporarily. Is freaking insane. But yeah, Disney is still on high alert for me. This huge green candle, I bet you everybody in the market, a lot of retail traders, a lot of Discord servers out there, even people who have MySpace are going to be posting Disney because it has that green candle. So anything right now that has a huge green candle, you're going to see it on everybody's watch list. And I can almost guarantee you right now that everybody's alert for long is going to be the high of the previous day, of today's high. Everybody's going to go long on today's high. But I'm going to tell you otherwise. Any green candle that you see tomorrow, use 50% of that. So in this case, what you want to do is grab 50% of this bad boy and then buy it at the bottom. That's all I got to tell you. For every green candle you see today, tomorrow, grab 50% of that, and that is your alert to buy. Giving you guys a dip buy now, then buying the highs. But yeah, you guys have any other questions? That was a good question, man. Thank you. Cool. Well, it looks like nobody asked questions there. So, but yeah, I guess I'll let you guys go since it's kind of like midday, and I don't know if you guys are still in trades. I'm still in Starbucks, not looking for any other trades. Just kind of hanging out and letting the market play out as it should. Yeah, for sure, Drew. Otherwise, I'm just kind of hanging out, guys, letting everything do its thing. Tomorrow will be a new day, and lots more setups tomorrow. Yeah, for sure. Oh, what's up, Joss? But yeah, let me know if you guys have any more questions in between. My DMs are always open. Feel free to message me, and whatever help you need, well, I'm here for. Nah, I'm not gonna record it. Well, yeah, maybe. Cool. Yeah, I'll probably post it. Yeah, I'll post it up for you guys. All right, guys. I'll let you guys go. Enjoy the rest of your day and stay green. Peace.